I would assume that the smash in silver has to do with the rest of the commodity complex, which is also falling. If you look at the gold to commodities complex, the gold to commodities ratio, gold is rising relative to other commodities, also close to the 2020 highs.
Right.
But silver as an industrial commodity, that's how it's trading right now, which means the public has not woken up to the fact that silver is money yet. I think the gold to silver ratio is now above 100, 103 last time I checked. It's only the third time in history this has ever happened. What's 15 to 100? That's 15 times 15, 30, 40, 60, 70, 90, 105. So seven times. If gold and silver does eventually go to 15 to 1 when the public recognizes that it is money, then each ounce of silver will get you seven times more gold at the top than an
Right.
ounce of gold will today.
Of course, the commodity being pursued is key to success. In the case of silver, the fundamentals are bullish due to demand forecasted to outstrip supply for the foreseeable future. Silver has a history of outperforming gold in most precious metals bull markets, predominantly as the rally peaks. In 2020, amidst pandemic-driven uncertainty, silver prices surged nearly 63%, outpacing gold's gains. A similar trend is emerging in 2025. While gold touched a yearly high of approximately 26% in 2024, silver quietly climbed 34%, setting the stage for a potential repeat of its past outperformance. Known for his contrarian views, Rafi Farber highlights gold's strong performance despite recent pullbacks, mocking the precious metals community's panic as investment malaria. Farber notes the gold-to-silver ratio has topped 100, a rare signal that silver may be hugely undervalued. If the ratio reverts to 15 to 1, silver could vastly outperform gold. Concurrently, he believes silver's drop is linked to the broader commodity slump, with the public still viewing it as an industrial metal. While gold remains the cornerstone of wealth preservation, silver's dual nature as a monetary metal and industrial powerhouse positions it as a potential standout performer. Investors seeking to diversify their portfolios may find silver increasingly appealing as 2025 unfolds. In the face of recent trends, Farber explains that central banks won't give up power voluntarily. It will be lost once their currencies lose value and money printing becomes ineffective. He compares this collapse to fallen empires that ran out of resources. He warns that economic pain will spread in waves, gradually impacting more people. The current American fiat money system allows the Federal Reserve to finance large trade deficits by printing money. Since abandoning the gold standard in 1971, the United States has had the highest trade deficits the world has ever seen, reaching a high of $758 billion in 2006. Returning to a gold standard would increase demand for gold and mining activity. Now we present the clips of Rafi Farber's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Yeah, gold has been showing very, very impressive strength. It hasn't even gotten close to breaking 3,000, and 3,000 was like 2 weeks ago. We're like, yeah, 3,000, it's amazing. And now we're like, oh, 3,000, I can't believe gold's getting smashed. I mean, yeah, it's like people have like investment malaria. It's like a hot, cold fever. It's can you just relax and th look, it's going to be volatile, but it's going to be a lot less volatile than everything else.
Right.
In terms of silver, I can only say in broad terms what's going on because I don't understand the silver industry in terms of silver as an industrial metal. That's really not what I know about.
Right.
So I would assume that the smash in silver has to do with the rest of the commodity complex, which is also falling. If you look at the gold to commodities complex, the gold to commodities ratio, gold is rising relative to other commodities, also close to the 2020 highs.
Right.
But silver as an industrial commodity, that's how it's trading right now, which means the public has not woken up to the fact that silver is money yet. I think the gold to silver ratio is now above 100, 103 last time I checked. It's only the third time in history this has ever happened. What's 15 to 100? That's 15 times 15, 30, 40, 60, 70, 90, 105. So seven times. If gold and silver does eventually go to 15 to 1 when the public recognizes that it is money, then each ounce of silver will get you seven times more gold at the top than an
Right.
ounce of gold will today. I'm not saying go out and pile all your gold into silver, but keep stacking. If you want a very good deal on a gold to silver ratio, there's not going to be much a better deal than this. They wouldn't let go of it. It's not that they would voluntarily let go of it, but the power would let go of them.
Mm.
Their power isn't the money printing power. It's that money printing sucks existing value out of the currency that they're printing. But if there is no value in it, they can't accomplish anything by printing it. So it's not that they're going to relinquish their power; they're just going to lose it.
Right.
Right. And like, but that's the story with every empire. It's not like, let's say Nebuchadnezzar or Cyrus or Rome or the Greek Empire. It's not that they chose to collapse. It's not like, okay, well, we're going to relinquish power now because we think it's better for the world. They ran out
Right.
of resources. And so they just collapse. So the central banks, they're going to run out of resources. What is their resource? Their resource is everybody's currency, everybody's use of the currency. But if nobody uses it, they have no power, and then everything crumbles. So that's what's going to happen. Now the question is, and what we were talking about before we started the interview is like, it's starting to weigh on me. I mean, I do try, and I think I succeed in maintaining a positive look at this whole thing. Just like 2020 shocked me but didn't shock me. It shocked me in the sense of like, oh my God, this is happening. And then, but it didn't shock me. And it was like, I should have seen that coming because, this is not going to be a candy walk in the park or something. The weaker parts, the weaker socioeconomic people, they're starting to really buckle. And it's, I can feel it. I can see it and it hurts.
Wow.
And it's going to come in waves. Like they're going to be the first ones to get hurt, and then the next people that are just barely making it, and then people that have a little bit of savings. And as these circles of economic destruction get closer and closer, I'm just going to be surrounded by more desperate and desperate people, and I have to now, just like I did in 2020, I was like, okay, this is the world now. This is what we have to do. We have to organize for medical freedom or whatever it is that we wanted.
Right.
Now, okay, well, now I'm starting to see the pain.
Regarding the recent market turmoil, Rafi Farber attributes it to trade policies like Trump's tariffs, not a banking crisis. He references Thomas Sowell's idea that such unpredictability causes investors to withdraw from riskier assets. Farber compares this to the Great Depression but notes the current inflationary context. He suggests that holding money now could mean investing in gold and silver. Tariffs create significant market uncertainty and volatility that typically affects all asset classes, but precious metals often respond in unique ways. When tariff announcements shake global markets, gold tends to hold its value better than other commodities, with historical data showing gold declining only about 2.8%, compared to much steeper drops in other sectors during periods of tariff-induced volatility. The current tariff situation resembles the 1929 and 1930 period, which combined a massive credit bubble with increasingly protectionist policies. The Smoot-Hawley Tariff Act of 1930 is widely considered to have deepened the Great Depression by restricting international trade at a critical economic juncture. Let's get back to the interview.
This is an economic trade phenomenon. It has nothing to do with the money supply or anything like that. It's not a banking crisis. It's just like the tariffs that he passed against the whole world are higher than anyone suspected they would be, though they shouldn't be so surprised. I mean, somebody like Trump, he's trying to go for what he believes in. If it's right or wrong, he believes it. So he's going to do it because, I mean, they tried to kill him. So he's going to do what he thinks he needs to do. It was recent. He was talking about the tariffs, and he said that when you make the rules and your idea is to just try different things until something works, and nobody knows what you're going to do next, then people are not going to move their money around. They're going to try to keep it safe, meaning they're going to pull out of stocks, they're going to pull out everything.
Yeah.
And now that's what they did during the Great Depression after after the Smoot-Hawley tariff was passed. That was a little bit of a different situation now that I'm thinking about it because Smoot-Hawley, that big tariff, passed in 1930, I think. That was really a protectionist goal explicitly. Like they wanted to protect American industry because their false ideas were the depression was causing job loss, and we need to protect what jobs we have remaining. So we have to put up a tariff wall, protect industry. And
Right.
then what happened was it's very shallow, childish thinking because then all other countries raised tariffs against American industry. Of course, that's what they were going to do, and then everything got a lot worse. This is a little bit different because in this case, not that I support the tariffs. I mean, I'm ambivalent about them in a specific way. Because in this case, it's like most of the countries already have high tariffs against the United States.
Right.
And what Trump is doing is saying, well, okay, well, I'm not going to take this anymore. I'm going to tariff you, even half as much as you tariff us. And then everyone gets freaked out about it. So in a way, you could say if Trump's goal is only short term to get people to blink and then say, okay, we'll let down the tariffs, and then he lets down the tariffs, that's fine. I mean, that's a negotiating tactic, and I
Yeah.
see the legitimacy in that. But if he's doing it as like he really believes in tariff protectionism, that tariffs will protect your industry and therefore benefit your people, which is a bunch of crap, then it's not going to work. But insofar as other countries are starting to blink, it might work, sort of. And that's why the stock market or the stocks generally are falling. But they're not falling relative to gold, and they're not even falling relative to silver. Silver has been smashed. I know that in dollar
Yeah.
terms, but relative to stocks, they've been going down pretty much the same rate. And gold has been going down about a third or a quarter as fast. And the gold to S&P 500 ratio is now nearing the 2020 highs, and it's gonna go much higher. So just to close this off, when Sol was talking about people holding on to their money, and therefore they'd pull it out of equities, they pull it out of risk momentum assets and stuff like that, Nvidia, Tesla, whatever, just
Right.
pull it out, take their profits. Then the difference between then and now would be okay, so we're gonna hold on to our money because we don't want any more risk. We don't know what Trump's gonna do. We don't know how these tariffs are gonna play out. So in a deflationary scenario, they just hold on to their dollars. But in the 1930s, the dollar was gold, $35 an ounce. But now holding on to your money could mean one of two different things. It could mean holding on to your dollars because
Yeah.
we're in an inflationary zone here. So insofar as holding on to your money means holding on to gold and silver, the dollar collapses. Insofar as it means we'll hold on to dollars and see what happens, the dollar will have some energy, and it's split. There's two things going on at the same time.
Beyond industrial demand and supply constraints, macroeconomic conditions are favoring silver. Silver shares many monetary drivers with gold, such as inflation, central bank policies, and currency devaluation. With the growing demand for silver, how do you think it will perform as more people begin to recognize its value in the coming years? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.